Hey everybody, welcome to the Power Investing Weekly Macro Review, where we take a look through a select group of charts and relative strength ranking lists so that we can get a top-down view of where the markets are from both a global and domestic standpoint to get our week started out correctly. Now, we typically start with our triple play charts, and as I did last week, I'm going to do again this week. I'm going to flip over to my trading view. Same type of charts, just a little bit more flexible as far as the time frames. And we can see here the SPY is still in a very strong uptrend, even though we had a rough reversal this week. Obviously, that reversal was a bearish engulfing. We had a bearish engulfing across all three of the majors. That's definitely a warning sign, but these are still in uptrends. Now, they were distribution weeks, and that makes three here very recently. So we want to be open and cautious about the potential of losing this level, especially on the QQQ, most current. However, we want to realize that these are still in pretty strong bull ranges until you get down to the IWM, where it's still in a bull range but looks like it might be ready to test. If it does test and lose this lower rail I already have marked around 206.50, 207-ish, then we can definitely get more concerned about a longer term pullback, which will probably also affect the larger plays. Now, when we flip down to the daily chart, you can see that the SPY, as I warned last week, and what I didn't like last week is how much these were looking like they might roll over right here at or below the 60 level, kind of like a failure type swing. We saw that, and we now see them all the way back down to where both the SPY and QQQ are testing the bull range. The IWM never made it to the bull range. Now, the only thing that's potentially good here is that the QQQ already has a CFG that's in the negative territory with it right here at 40. With it being the one on the most, urgent level at the moment, it's something that we want to see if it can hold here or if it falls through. Again, with these, realize a lot of times it likes to make a quick run through maybe for a day or so and then come back up, almost like kind of a failed breakdown. Doesn't mean it has to come back up, so you certainly want to remain cautious until you see those buyers come in. Now, when we flip down to the 65-minute, you can see here on this particular chart that all three of these are currently in RSI bear ranges. So again, it's guilty till proven innocent, as my friend Brian Shannon would say. And we want to see that basically we have divergences starting, but they need to follow through, and we need price to start working with them. So we move back over to the macro page. After we look at the triple play charts, we pull down to, we have the breadth coming up next, but I'm going to look at that once we get over to the universe page here in just a few minutes. It did weaken this week, and that's something as well we want to make sure that we're conscious of. Now, the world ETFs, what I thought was very interesting is the US dropped pretty heavily here to where the SPY dropped to number 26 out of 40. And the QQQ down here all the way down to, I think it is something like number 46, or 26 out of 60, and number 46 out of 60. IWM's way down at the bottom. But as you can see, we're certainly not leading the global charge here on the 3-month relative strength. Something I did notice probably pretty interesting to me was that we did see quite a few European, as well as India and Mexico up here towards the top. So a lot of things that are not US that are starting to move right now. A lot are in some of the other developed areas. These are areas that have been laggards for a long time, so it might be worth us paying a little bit of attention if it keeps up. From an intermarket standpoint, you can see we have, again, more inflationary type stuff leading USO, DBC, IYR, JJC, things that are basically commodity based that can get more expensive as we go, whereas the Dow and the SPY here are still up here. The QQQ dropped big, and the IWM is now towards the bottom of our intermarket list. This is not a great setup for equities. It definitely does kind of go with the inflation type opinion. The question now comes to how long it lasts, and again, until we start seeing some price changes, we can't doubt it too much. The size and style definitely moved over this week definitively to the value side. Obviously, with the type of price action we saw, makes sense. These are the only ones that were positive this week, and all your growth areas were really, really difficult and negative, going from large to small across both sides, but still, growth is all on the bottom. And then once we get into the sectors here, we see the market weight. We're at energy, consumer staples, financials, and material on the market weight. We have energy, staples, financials, materials on equal weight, and then we have consumer staples on top of small cap, then financials, then materials, and energy all the way down here in the middle. Something to think about there from the small cap standpoint. But again, small caps still are not leading the charge here, so we really can't trust jumping straight to them. Now, when you go over here to the universe, again, this is our equal weight universe that we build, just under 3,000 stocks. You can see right here on the RSI chart, this is still in a bear range and it's trying to roll over here. Now, luckily we had a higher close over here, so it's not a negative reversal, but it is something we needed to get over and hold over this 1180 to maybe 1190 area before we can get kind of comfortable, and that should also help move the RSI back up. So can't be overly comfortable no matter how we look based on what these charts are looking like. Now, when we look in the universe breadth, you can see right here that, again, we don't have terrible breadth. We're right in the middle, pretty much in neutral zone for all the moving average breadth. The no new highs here for the advanced decline line, which makes sense since we haven't made it for the price. And the summation index is flattening out some. So we definitely had a weak pause, or a pause this week, as we saw some of these things come off the big surges that they had. But it doesn't mean they're rolling over yet and we're going straight down from here. We want to see kind of where the QQQ especially starts next week and plays itself out a little bit. Now, when I look at the relative comparatives, again, versus small caps, it's still running, which means small caps are still extra weak. Versus QQQ, it's running. Versus SPY, it's sideways. So SPY is definitely our leader right now in the overall markets. And then the new lows is starting to perk up a little more than I'd like to see here. So, this rollover could be real, and we could come back down and test the lows, just like with IWM, this being the more broad area, or broad market area. That 1098 area or 1095 area is probably pretty important here on this equal weight index. Now, we look at the sectors: energy, financial, materials, consumer staples. Very similar. Big moves from energy and financials this last week, coming from 55 to 91 for financials and 18 to 100 for energy. This brought them back up in those 3-month relative strength big RS movers here on our list. Technologies, communication services, and healthcare are still bringing up the rear. Now, when we look on our overall equal weight subsectors, big movers here that are up in our top plays: energy, materials, financial, energy. Utilities still up here, but it was already up there. Financials, another mover. Next mover down is another energy play. So realizing those were the two sectors that really took over the week and ran with it. But when you go in and look at their charts, which we looked at quite a few, they are certainly showing a lot of strength overall. And these charts, while moved a lot this week, still have a good potential to break out from here on an intermediate time frame. And a lot of the energy names and quite a few of the financial names have already been moving strong, but are making small to medium breakouts from a high level. So something we definitely want to keep an eye on there. From the sector weight standpoint, looking at just the RS movers and the subsectors, again, all of the energy ones are right up top. Financials, 3 of the 5 I think are next. Communication services, media, and entertainment. This is should be a surprise, but it's very interesting because there's some good stuff looking in there. And I mentioned this being a really beat up area, but someplace I kind of wanted to pay attention to. It made a big jump this week, so this may be one of our reversal areas as we start to or continue to move forward. Industrial metals, yes, those have been strong. Aerospace and defense is kind of moving up in the middle here as well, so might want to take a look inside there on the sector view and other. But this is kind of from an overview of the markets. We're definitely seeing a lot of rotation, as well as, because again, like I said, when I do this, notice how many of these movers are up here up top and that are losing from the top. So a lot of rotation in the top half of this list to show that there's some new leaders really emerging. And even though that someone moved big this week, they could consolidate for a few days and keep going at these levels that we're seeing. So again, it depends on how far this inflation play is going to run out here in the short term, but it still looks so far that there's no reason to question the price action that we're seeing. All right, I hope this kind of helps you get the week started off from a macro view. Again, gives you a top-down view of global and domestic, and hopefully we can now move on in the morning to the sector view to take a look at some different sectors that are performing well and some ETFs that might be in worth watching this week. All right. Hope everybody has a great week, and we will talk to you soon.